All right, let's dive into BE Semiconductor, or BSI, as most of us know them. So here's a weird one. Their latest earnings report comes out, and revenue is down. A lot, like 15%. You'd think the stock would get hammered, right? Well, it didn't. It actually rallied. We're going to break down exactly why investors shrugged off the bad news and started buying.
Yep, you're seeing that right. On October 23rd, the day of the call, the stock jumped over 4%, a pretty significant pop. Now, a move like that on a day with seemingly bad news tells you one thing. Wall Street was looking at something completely different, something way more important than the headline numbers.
So, what did they see that the rest of us might have missed at first glance? I mean, why the big rally? What was in that report that got the market so excited when the big, flashy revenue number was, frankly, pretty ugly? Well, the answer is all about that classic Wall Street story, the battle between the past and the future. Okay, so let's get into the headline numbers. And really, it's like looking at two completely different stories at the same time. And this is the absolute key to understanding the market's reaction. You have to separate what's in the rearview mirror, that's the revenue, from what's coming up ahead, which is the orders. You know, revenue tells you how the last 3 months went, but orders tell you how the next few months are going to look. And that's what investors really care about. And here it is laid out plain as day. Just look at this stark contrast. Up top, you've got revenue at about 133 million euros, down over 15%. Yikes. That's the past. But then, look right below it. Orders came in at almost 175 million euros, over 15%. Now that is the future. This massive split is what we analysts live for. It's called an inflection point. It's a giant, flashing sign that the whole trend of the business is turning around. Honestly, this is the most important part of the entire report, period.
All right, so the numbers tell us what happened, but what we really need to know is why. That's where management's story comes in. Let's hear what the CEO had to say about this big turnaround.
And there you have it, straight from the CEO's mouth. The magic word, AI. He's not being subtle here. He's saying the reason their orders are so strong is because of the massive expansion of AI data centers. These giant tech companies are building out their infrastructure like crazy, and they need BESI's super-specific advanced chip technology to do it. For anyone watching, this isn't just a one-quarter bump. It's a sign they're plugged into a huge, long-term trend.
You know, talk is one thing, but they're putting their money where their mouth is with some really strong guidance for the next quarter. They're forecasting revenue to jump another 15 to 25% from Q3. That's a huge acceleration. And what's really impressive, they're doing it while keeping their gross margins in a really healthy range, and they're actually increasing spending on R&D. That tells you they're not just surviving, they're playing offense and investing to stay ahead of the curve.
But let's be fair, it's not all sunshine and roses. Management was pretty clear that their more traditional markets, things like regular smartphones and car chips, are still pretty weak. And that's important because it shows just how much they're depending on this big pivot to AI to carry the company right now. So that brings us to the real core of the story, right? Why investors are so confident in BESI. It's not just that they're selling into the AI space, it's that they have something the AI industry desperately needs to even exist. This is their secret sauce. And that secret sauce has a name, hybrid bonding. The easiest way to think about it is like building a skyscraper instead of a sprawling, single-story campus. Instead of laying computer chips out flat side by side, hybrid bonding lets you stack them right on top of each other. This makes them way more powerful and way more efficient. And it's absolutely essential for the next generation of AI chips and for high bandwidth memory, HBM, which is the super fast memory needed to train these massive AI models. And right now, BESI is the king of this technology. And you can see this leadership reflected right in their stock performance. Over the last year, BSI is up 38%. That's beating the overall semiconductor market, which is already on a tear. What this tells me is that smart money has been betting on this AI story for a while. And this latest earnings report was just the confirmation they were waiting for. And if all that wasn't enough, management dropped this little nugget. A new 60 million euro share buyback program. I mean, that's management basically shouting from the rooftops that they think their own stock is a great investment. It's a huge vote of confidence. Okay, so let's put all the pieces together. Where do we go from here? Here's our official analyst take on BSI heading into the next quarter.
We're rating BESI as an outperformer. It's pretty clear to us that they've hit that inflection point we were talking about. And as this massive AI build-out continues, we believe the market is only going to put a higher and higher premium on their leadership in hybrid bonding.
So why outperform? It really boils down to three key things. First, That AI order book is not a fluke. It's accelerating. The numbers prove it. Second, their leadership in hybrid bonding is their moat. It's a huge technological advantage that's very hard for anyone else to copy. And third, they're running the business really well. The strong margins and that new buyback show they're disciplined and focused on creating value for shareholders. Now, every investment has a risk, right? For BESI, it's pretty simple. The whole story hinges on AI spending staying strong. If for some reason the big data center players hit the brakes, BESI will feel it immediately. But for right now, all signs are pointing to that spending spree continuing at full tilt. And of course, we have to say it, this is for informational purposes only. This is not financial advice.